very few investors are feeling optimistic about China's growth potential at the moment. But I would say sentiment has improved somewhat over the past few months, especially after the relatively good first quarter number and also some of the support measures for the property market being announced in May. I mean, the improvement in sentiment is not so big that drive investors who don't have to invest in China back to China. But I think it is big enough for those benchmark investors to at least reduce their underweight to China in the past few months.
Is it significant, the underweight? Is it significant?
The underweight was very significant. So for emerging market credit funds, for their benchmark, China accounts for 7 to 8%, the benchmark. But most of the emerging market credit fund, they will have 1 to 2% in their portfolio to China. So it's 1 to 2% in their portfolio versus 7 to 8%. So it's very, very underweight. I mean, Asia dedicated investors cannot be that underweight because China is 50% of their portfolio.
Have you ever seen this in your career where the underweight is so significant?
It's only in the past 12 months, I would say. But there is some structural issue for emerging market credit funds because a big part of China dollar bond is actually state-owned enterprises and also financial bond issued by financial institutions. So their underweight also reflects the valuation. Despite foreign investors' attitude towards China dollar bond, Chinese investors actually have very strong demand for Chinese dollar bond. So if we look at valuation, surprisingly, the dollar bond issued by Chinese SOEs and financials, they are trading in line with the US equivalent, or in some cases, they're more expensive. So it's not like they hate to hold those, but they don't feel they are missing anything by not holding those.